Looking to get paid monthly while holding solid long-term stocks? In this video, I'll reveal the top dividend stocks to buy in June 2025 that can help you earn passive income while your wealth grows. Topics I will cover in these videos are market capital, current stock price, dividend yield, average 3-year dividend yield, total return CAGR- compound annual growth rate, TTM chart, trailing 12 months, stocks performance first and third year chart, valuation metrics, stock price metrics, growth rate metrics, yearly returns, average annual returns by period, and lastly, revenue metrics. These picks are stable, high yield, and built to last, even in uncertain markets. Let's jump right in. First stock is Realty Income Corp. The monthly dividend machine. Company intro. Known as the monthly dividend company, Realty Income is a REIT, real estate investment trust, that owns and operates over 13,000 commercial properties under long-term net lease agreements. Its tenants include major retailers like Walgreens, Dollar General, and 7-Eleven. Market cap, $50.55 billion. Stock price, $55.94. Dividend yield, 5.7%. Dividend frequency, paid monthly. 3-year price performance. Despite interest rate volatility, Realty Income stock has stayed resilient with modest 3-year price appreciation of 12%. 3-year dividend growth. Dividend payouts increased by about 9% cumulatively, highlighting consistent income growth during inflationary periods. Key growth drivers. Expanding its real estate portfolio in defensive sectors like convenience stores and healthcare. Long-term lease agreements ensure stable rental income. High occupancy rate, greater than 98%, ensures strong cash flow. Analyst sentiment. Analysts remain bullish due to its monthly payout structure, stable cash flows, and robust tenant base. Most have a buy or overweight rating. Conclusion: if you're seeking monthly passive income, Realty Income is a top-tier dividend play. Its stability and consistent payouts make it a favorite for income-focused investors, especially retirees. Second stock is Johnson & Johnson J&J, the defensive dividend giant. Company intro. Johnson & Johnson is a healthcare behemoth operating in pharmaceuticals, medical devices, and consumer health. Its broad portfolio makes it recession-resistant, with steady earnings even in downturns. Market cap, $374.12 billion. Stock price, $155.27. Dividend yield, 3.38%. 3-year price performance. The stock has delivered a solid 25% total return, boosted by demand for its pharmaceuticals and surgical technologies. 3-year dividend growth. Johnson & Johnson increased its dividend by 15% in 3 years, maintaining its status as a dividend king with 60-plus years of growth. Key growth drivers. Ongoing expansion in oncology and immunology drugs. Growth in robotic surgery systems. Consistent demand for consumer health brands globally. Analyst sentiment. Wall Street considers Johnson & Johnson a long-term winner. Its diversified operations and AA-rated balance sheet make it a core dividend holding. Analysts rate it as buy for income and defense. Conclusion: if you want a safe, growing dividend backed by essential services, Johnson & Johnson belongs in your portfolio. It's boring, but boring builds wealth. Third stock is Procter Gamble PG, the inflation-proof income machine. Company intro. Procter Gamble is the king of household goods, owning brands like Tide, Pampers, Gillette, and Head & Shoulders. It's a go-to stock when markets get rough, thanks to consistent demand. Market cap, $385.37 billion. Stock price, $164.65. Dividend yield, 2.6%. 3-year price performance. PG stock returned 22% total over 3 years, largely due to brand power and pricing strength. 3-year dividend growth. Dividends grew by 16%, showing reliability through economic cycles. Key growth drivers. Strong pricing power. Consumers continue to buy essentials. Strategic cost-cutting and margin expansion. Boost from e-commerce and supply chain optimization. Analyst sentiment. PG is a staple in dividend portfolios. Analysts consistently recommend it as a buy, citing resilient cash flow and shareholder-friendly policies. Conclusion: with recession-proof products and consistent income, P&G offers a blend of stability and growth, ideal for long-term dividend investors. If you're finding value so far, hit that like button, like it, share it, and don't forget to subscribe and turn on the bell notification so you never miss new videos on stocks, dividend stocks, and many more topics. Subscribe, it really helps the channel. And don't go anywhere. Our next pick is an energy giant paying out massive dividends while still growing strong. Fourth stock is Chevron Corporation, CVX. Big oil, bigger dividends. Company intro. Chevron is one of the largest integrated oil companies in the world, with operations in upstream oil and gas exploration, midstream and downstream, refining and retail. Known for strong dividend reliability, Chevron is a go-to stock in the energy sector. Market cap, $244.80 billion. Stock price, $140.15. Dividend yield, 5%. 3-year price performance. Chevron has delivered a 3-year total return of around 28%, fueled by high oil prices, strong earnings, and capital discipline. 3-year dividend growth. Over the last 3 years, Chevron has increased its dividend by approximately 18%, maintaining its long history of annual increases over 36 years. Key growth drivers: rising demand for global energy and LNG exports, strategic acquisitions like Hess to expand in key regions, aggressive share buyback programs to support shareholder value. Analyst sentiment. Analysts favor Chevron for its strong free cash flow, consistent dividend policy, and oil price leverage. It's considered a buy for investors seeking energy exposure plus high yield. Conclusion: if you're looking for high yield with global scale, Chevron delivers. It's a dependable income machine that also benefits from rising energy demand, ideal for long-term holders. And the last stock is Pembina Pipeline, PBA, Canada's monthly dividend star. Company intro. Pembina Pipeline is a leading Canadian energy infrastructure company, transporting oil, natural gas, and NGLs across North America. What sets Pembina apart? It pays a monthly dividend, a rarity among large energy companies. Market cap, $29.93 billion USD. Stock price, $51.53 USD. Dividend yield, 5.51%. 3-year price performance. PBA has posted a 3-year total return of 30%, supported by stable earnings and new infrastructure expansions. 3-year dividend growth. Its dividend has grown modestly, 10% increase over 3 years, with monthly payouts adding compounding power. Key growth drivers. Strong demand for liquids and gas transport in Western Canada. New pipeline and export terminal projects. Stable, long-term contracts with investment-grade counterparties. Analyst sentiment. Analysts rate Pembina as a buy for income investors. Its reliable monthly payouts and exposure to critical energy corridors make it attractive for those seeking consistent returns. Conclusion: for investors who want monthly income without the volatility of U.S. oil giants, Pembina Pipeline is a top-tier pick. It brings high yield and North American infrastructure growth together. Conclusion and final recap. So there you have it. 5 of the best dividend stocks to buy right now in June 2025 if you're serious about building consistent income and long-term wealth. Let's quickly recap. Realty Income, the ultimate monthly dividend REIT. Perfect for passive income seekers. Johnson & Johnson, J&J. A healthcare powerhouse with over 60 years of growing dividends. Procter Gamble, PG, the king of consumer staples, delivering stability and inflation-proof income. Chevron, CVX, a high-yield energy giant with global exposure and strong shareholder returns. Pembina Pipeline, PBA, a Canadian dividend gem offering monthly payouts backed by real infrastructure. Whether you're aiming to supplement your retirement, grow your portfolio with reinvested dividends, or beat inflation with real income, these stocks are designed to reward patient investors like you. If you got value from this video, make sure to like, subscribe, and drop a comment with your favorite dividend stock right now. Are you Team Realty Income, Team Chevron, or do you prefer international picks like Pembina? Also, hit the notification bell so you don't miss our next video. Thank you.